as a theme to play.
Yeah.
And that's the large takeaway, right?
Except for maybe gold financing companies, because their guidance uptick today, individual of what they may have said, but their guidance uptick today could be really good.
Financial market players as well. That could be another space on financialization of savings. So there's enough and more in the market, but like Niraj said, yesterday was a very interesting day. That sell-off came out of pretty much nowhere. But one sector that stood out for me was consumer durables. They interestingly held up on a bad market day. So there was some buying. It would be unfair to say that it was a blanket sell on D Street yesterday. And so did healthcare do okay. So healthcare as a pack continues to see some defensive play, if I may add, and consumer durables managed to also see some buying interest. A quick take on what happens as we go into trade this morning. There's going to be a little bit of pull from the bulls and the bears. It may be a tight fight, to say the least. Remember, we're going into a holiday tomorrow. So whatever data we get from the US, our markets will only react to it on Friday. Traders may want to keep positions light. Usually happens ahead of a holiday. Well, a trading range that's going to be critical for the street is 24,000 on the downside and 25,000 on the upside. A breach of either levels could potentially change the direction of the markets, and this is technically. Fundamentally, of course, we can argue about valuation and sectors that look attractive, but the trading range, and it's a 1,000-point trading range you're eyeing, 24,000 was respected even yesterday. The hope is that that continues to be an important level of support. And of course, if we get levels out of like 24,700 next week, who's to say 25,000 is out of sight? So break on either sides could change direction for traders on the street. Our VIX saw a little bit of an uptick yesterday, Niraj, and I think at levels of 16, 17, the bears usually get a lot more comfortable than the bulls. And that's what worries me a little bit, because bulls may not come out strong, largely because tomorrow's a holiday, so we won't be reacting immediately to that inflation data from the US. So maybe a little circumspect, a flat day of trade with a slight positive bias if I had to put money on the table.
Yeah, so we do have conflicting opinion. One thing on your camp, Samina, 16 stocks in the FNO ban. Usually that happens when there is some bit of froth, etc.
Yeah.
So I don't know, but somehow, I don't know. Yesterday, the texture of the market was a bit disappointing for me. Hopefully I win and we see a bit of an uptick today.
Okay. We will wait and see, and we'll of course take stock of that at 3:30 p.m. this evening. But lots of earnings. We're on the last leg of the earnings season. A bunch of companies that I'm going to start with. Hero MotoCorp. There's been no major outperformance from any of the earnings I'm going to report on this morning. Hero MotoCorp reported numbers in line with what the street was expecting. Revenue was up 16%, EBITDA was up 21%. Margins have actually improved for Hero MotoCorp, 14.4 versus 13.8, and net profit was also up 36%. Now, what you want to keep in mind is that last year's profit had an exceptional item of 159 crores, because of which you are seeing the kind of numbers that you are seeing. So it may not be fair to compare it because of that exceptional item that was seen on the book last year. The good news is they've crossed 10,000 crores for the very first time, so it's record numbers in terms of revenues, and it's also the highest ever PAT for Hero MotoCorp. Volumes were quite healthy, and June monthly sales also saw a surprise positive rural sentiment. So adding to Niraj's point, what he said that at MK they've realized, or they've talked about how rural consumption is seeing a pickup, the same was reflective in auto sale numbers that came in from Hero MotoCorp, indicating early signs of recovery in the rural India. That was, of course, what I have on Hero MotoCorp. One that stood out for me was fantastic. It's not a very large company, but we've been talking about it because it's been so action-packed for railway stocks. Texmaco, rare performance in terms of outperformance on earnings. Texmaco Rail has reported numbers that have beaten street expectations by a mile. Revenue was up 36%. EBITDA was up 250%, coming in at 70 crores versus 20 crores that was seen in the same quarter last year. Margins have also expanded exponentially. So they've come in at 7.9% versus 3.1%. And net profit was also up just in line with EBITDA, up 250% at 70 crores versus 20 odd crores. Now, what worked for Texmaco? So apart from, of course, selling more and improvement in business, they've improved operationally as well, and that is the good news coming in for Texmaco. So very clearly we can say that the next few quarters, they will continue to reap the benefit of operational efficiency. Finance costs have declined by 30%, depreciation costs has declined by 25%, and other expenses are down by 54%. So not only are they selling more, they're selling better, and they've actually cleaned up the house, and that's going to work out fairly well for Texmaco going ahead. Well, another one on the list, another stellar performance, and I know Niraj would love to talk about Astra Microwave. It's a small company, but very, very good earnings. Revenues were up 16%. EBITDA came in at 24 crores versus 3 crores. Margins have expanded at 15.5 versus 2.3. Now, that is the kind of performance this one has pulled for the quarter. Net profit has come in at 7.2 crores versus a loss of 6.7 crores. Their order book is exceptionally healthy at 2,099 crores, and their margins have improved due to a better geographical mix. So I guess they've cracked the code, and higher margins may potentially be sustainable. We'd love to, of course, talk to Astra Microwave to understand whether this sort of performance is sustainable for the rest of the year or for the foreseeable future. So Niraj, great numbers, Astra Microwave, Hero MotoCorp largely in line. And I think Texmaco also has done well because operationally they've pulled out a good performance.
Yeah, they did. Let me kind of counter that with 3 bad results. The long list, by the way.
And you're the one betting on a gap up, huh?
Yeah, but some individual numbers, actually very small numbers, to be honest. But watch out for Nalwala contracts, for example. We're talking about how some of the construction companies might also see some issues. So revenues were up 20%, but profit after tax was down 40%. And why? EBITDA margins were down 427 basis points at 6.53% versus 10.81. The estimate was 10%. So there is clearly weakness in Nalwala contracts today. Remember, viewers, this 427 basis points effectively is the quantum of percentage points. So from 6 to 10 is 400 basis points. So Nalwala contracts lost 427 basis points of margins and versus estimates of 10%. So weak numbers very likely could react. NBCC was an all-round miss, I thought. Revenues are up 11% at about 2144 crores, but the estimates were 2774 crores. Operating profit margins for NBCC 4.27 versus 2.96 seems good, but the estimates were 6.3. So relative to estimates, a miss all round. NBCC is the second stock that could have a bit of a weakness. And HEG, the stock was in the green yesterday, but look at the numbers. Revenues down 15%, profit after tax down 83%, and margins came in at 6.8% versus 22.5%. Now, you know, these things could change, but for now, you look at the quarter one numbers and how it is, and it looks wobbly. So therefore, there is a bit of an issue when it comes to the HEG numbers, and you might want to watch out for this one. Could see a bit of a reaction in the session today. You know, because the number of the list of stocks which will react today is so large that I think today we'll probably spend the rest of the next 10 minutes also talking about specific stocks. I mean, I have a long list, but I'm sure you do too. What else?
Quickly, I mean, they might not be market-moving earnings, but important earnings. So the likes of a Nykaa, definitely worth the mention because this has got so much of interest from retailers and, you know, consumers as large. It's a consumption-facing company, and that explains the excitement. Their profits have actually surged 151%. So at 13.6 crores versus 5.5 crores, that was in the same quarter last year. Revenues have increased 22%, and the company has, of course, given us an update where they've said they're going to acquire 39% stake in Dot and Key Wellness from the promoters or existing shareholders for 265 crores. So Nykaa, which did really well, or rather was down in trade yesterday, could be one to track this morning, may see an upside move on back of those earnings reporting. Piramal Enterprise, when you see the numbers on the face of it, they look bad, but it seems like they were largely in line with what the street was expecting, and hence the reaction could go either ways. Profits are down 60% and revenue has plunged 64% on Piramal Enterprise. Gujarat Narmada,
one
Piramal.
No other things, but yes, you might be right because some of the brokerages, for example, while they are not terribly gung-ho, but the target price, for example,
on
Jeffries,
Piramal or Nykaa?
On Piramal, Jeffries has raised the target price marginally from 785 to 805. The current price is still 985, so there is about an 18-19% downtick. But
and I think it's important for us to bring that to the viewer, because if you look at the numbers, you'd assume the stock is a straight sell, right? Because the profits have been hit sharply, revenues have been down, but a large part of it is already priced in by brokerages. So, like Niraj as well indicated, the reaction may not be too bad on Piramal Enterprise because it's come in line with what the street was expecting. Gujarat Narmada Valley, a fertilizer company, smallish but nevertheless worth mentioning. Profits have grown 34% and revenues are also up 22.5%. I want to quickly mention about a sort of block deal that happened on Brainbee Solution yesterday. So Nomura India Investment Fund, of course, this is a brand new listing on D Street, and hence I'm mentioning it, has bought 0.93% stake in the First Cry operator. This was done at an average price of 681 rupees. So if I can just get First Cry or Brainbee up on the screen, it should be useful for our viewers to see that you have very significant stalwart mutual funds that continue to buy into the stock even post-listing. The stock was up 46% yesterday, and you had a mutual fund that came in at the day's high point on Brainbee, Niraj. But I think Vedanta is well an important one this morning.
Yeah, I mean, or Hinzing, if you will,
Hinzing,
simply because of this block. The stock was down about 5% in trade yesterday, Hinzing. Vedanta will sell about 2.6% stake through an OFS. Now, the point is for Vedanta, the proceeds that come in is about 5 to 6% of an EPS impact as per some brokerages. So therefore, the stock was sulking in trade yesterday, as were some of the other metal counters in trade. But very likely, this could be construed positively for Vedanta. Hinzing is a very difficult stock to trade, viewers, keep in mind. It tends to surprise most people when news are good or bad. So be careful if you're trading Hinzing. For Vedanta, this could be construed marginally positive. So you want to watch out for that. What else? There are some results which were very good. So I want to, and some which were bad too, by the way. So just want to mark up all of those. Watch out for the gold loan companies today. To my mind, that is the standout sector. I mean, it's just two companies, but the standout theme of the session today. And I'll tell you why. Muthoot Finance, very strong quarter, robust traction in gold AUM. And they have given a very strong guidance, aiming for a 15% AUM growth. And the company says that they will revise these targets after the first half is done, as they approach the festive season or get some flavor of the festive season as well. And they plan to open 100 branches this year. So therefore, I would watch out for what's happening to these names in the session today, Manappuram and Muthoot. In fact, Muthoot Finance, I was looking at the Morgan Stanley note. They have mentioned this, that the stock reversals, there are very sharp stock reversals in the past. When gold loan prices stagnate or start falling, the stock has rallied quite a bit as well, but they have raised the standalone EPS estimates by 3.3% and 3.7% respectively. So keep an eye out for this one. Could be interesting. Some brokerages have reduced the target prices, but both Manappuram and Muthoot have given an upward revision of the guidance. It's something that you got to watch out for in the session today.
Did you talk about TBO Tech? Because those were, again,
the numbers were pretty decent.
Very good numbers there. And I know you track this quite closely. So you want to... Okay, revenues were up 13% on this one. EBITDA was also up 31%. Margins have improved fairly significantly, I would say. 200 basis point movement is pretty good for the company in the quarter at 15.8 versus 13.7. And net profits have also come in at 61 crores versus 46 crores. There's a good chance the stock will get a gap up on back of numbers that have beaten street expectations. So that's what I have. And a quick mention on Ola Electric. It's had a dream run. I mean, whoever called this stock, or I guess there were analysts who did believe that the counter was an expensive one. If I can just see what it's done from listing data today, that should be useful. But the reason I bring this up is because they would be reporting earnings today. So it'd be interesting to see how the market takes to the first public reporting of earnings on Ola Electric. The counter will be one that I would be tracking as well, amongst many others.
Yeah, some results though. I just want to mark some results, 3 or 4 names. So I'll now give you the good ones, viewers. Techno Electric, revenues up 37%, profit after tax up 288%. And why did this happen? Because operating profit margins expanded from 7.74% to 13.9%. So Techno Electric, one very big positive, small stock but could react. Valor Estate, And multiple reasons for Valor Estate. This is the erstwhile DB Realty, right? Our name rechange. Revenues at 79 crores versus 2.43 and EBITDA going up. Remember, it's very difficult to map real estate companies on the back of what they report in a quarter because they're only reporting the numbers booked. Pre-sales might be a better bet. But in Valor Estate's case, the other big positive, aside of these very good reported numbers or seemingly good reported numbers, is the fact that they've done some tie-ups, which could be very interesting. A newspaper reported a 20,000 crore project with L&T, wherein Valor Estates has 40% stake. So therefore, that could be very interesting as well in the session. And Markson's Pharma is one more, wherein I don't know if the estimates were a bit conservative, but look at those numbers. Operating profit margins at 21.79 versus 20.44. The estimated were 12.4. And profit after tax up 26% at 89 crores. The estimates were 26 crores. So way above expectations. May see a bit of a reaction in the session today.
Just one last one. I don't know whether we mentioned this, and we will, of course, take you through what the management says on Apollo Hospitals. It's been a good quarter. They've managed to do well consistently quarter on quarter. The management had committed to a 15% revenue growth over the foreseeable future, and she has delivered. Apollo Hospital, Sunita Reddy, of course, will be talking to us and telling us how the quarter has been. But the stock was up 1.5%. The earnings were good. Revenues were up at 15.1%. EBITDA was up 33%. Margins have also expanded quite well, and net profit has jumped at 82%. The street was expecting close to 70% rise in net profit. All their verticals are doing well. Oncology is growing well. Apollo Diagnostics, Apollo Hospitals and Apollo Healthcare are all doing fabulously well in terms of operational performance. And of course, the management is confident to bring those 2,300, 2,500 beds to capacity over the next 2 years, and also very hot and continue rather to remain hot on acquisitions in the financial year. So all in all, I think Apollo Hospitals as well, good numbers. But I think it's a 50-50. You've got many that are good, but largely most in line.
Yeah, a lot of them in line. The large ones certainly seem to be in line.
Hero
Samina,
Motorcorp hasn't done too much, I think.
SJVN was a good number, but in line with expectations. NBCC was a bit of a miss. So those are a few that stood out.
was good. Astra Microwave, TBO Tech. Those are the smaller ones, but I think the markets like trading counters that are rather liquid, but in the broader market space.
Yeah. So I think that will be the nature of the day. A slightly quiet start, but maybe doing well. But, before we take that break, it's pertinent to try and hear this conversation again and again, because this is a view coming in from Enam Holdings. Manish Chokhani, where he believes that India's positioning globally has never been better, and there is merit in India marching to its own beat and ignoring the boos from the gallery, quote unquote, not really quote unquote. Let's listen in to his rationale behind this belief.
These flows have been incessant. And in fact, if you had asked me this last year, I would have said this market is going to just go into an explosive bubble on the way up. And the melt up has surely been occurring on the small cap, mid cap side. One is also seeing some craziness going on the F&O side of the market. We're already at 150% of GDP in terms of market cap, which is really the peak we hit in 2007. So all from those parameters, it's a bit giddy to be sitting where we are. The only happy note over here is that the large caps don't look excessively mispriced. We may be 6 months, a year ahead in terms of earnings, but let's say this market were 10-15% lower, everyone would be fairly comfortable saying let's come back and buy it again. And to be honest, most of the foreign investors have been waiting for that sort of pullback in the market without much success to come back in. So my best guess is if this market just stays where we are and we just tread water for some more time and we arrive into the next year at similar sort of valuations, I think everyone will be feeling a lot more comfortable. If, however, we do some of these policy things which were expected of India, such as, on the foreign exchange front, such as on labor reform, such as on agricultural reform and so on, and start getting this economic engine running a lot faster with lower inflation, then the deluge of money which is going to come to India from overseas cannot even be quantified. And then you have the classic makings of real acceleration, because you have domestic money continuing to come in through these SIPs and so on, plus, of course, the money which is coming through the EPFO and the LIC and so on, and it'll be supplemented by the foreign money. So until that happens, I would think the best course for us is really to tread water, and hopefully some of the supply response, which the corporate sector is doing by selling paper down into the market through primary issuances or QIPs, that hopefully just keeps a lid for some time to allow us to really grow earnings into these valuations, because we are ahead of what reality is currently.
Got it. And you reckon that the flows globally, or as the case may be, would be amongst many other factors also seeking the regulatory changes and the reforms that you alluded to, because some of these have been tried, half successful, given up, etc. It's a new term, 5 more years. You reckon the chance is the best to do it in the next 12 months?
No, Niraj, like I said, it's a valuation thing that, at a certain price, you're pricing in a lot of perfect execution.
Got it.
If let's say this price was 15% lower, you would have seen a lot of flows coming in. Given where the prices are and given the slightly weakened mandate, the expectation that you can ram through things, which, for example, on the labor reform side or even on land reform side, on skilling and getting a lot of jobs getting created a lot faster, which will require ease of doing business, judicial reforms, and so on. So some of that certainly has become a little more tepid in I think, the overseas investors' mind. Having said that, I mean, give this market some time to correct on valuation, either time-wise or value-wise, and you'll certainly be surprised by the amount of strong foreign inflows that are waiting to come in.
Okay, just one more question on this whole market, actually 2 more questions before we take that break, Manish. One is the last 18 odd months, some bit of global scrutiny that Indian markets have gone through. I mean, but just the difference that the market showed in shrugging off let's say, for example, I'm just using that as an example, the Hindenburg note that came in over the weekend versus what happened in the past. And the fact that Indian markets now seem to be a lot less high beta than what they were. I mean, traditionally we've seen global markets correct 5%, Indian markets would correct 10%. We are looking very different now. I mean, are there some signs that you read from all of this that is happening, what happened yesterday and today, or what happens in the last few months when the global market correction has happened and India has not corrected as much?
Niraj, this is really, like I said, if your country has gone from whatever rank 50 to rank number 4, it's a sign of becoming a lot more confident about yourself. In the past, any foreigner wrote anything about us, leave alone Hindenburg. I mean, he's like just a small kind of brokerage trying to short sell. Really not relevant. Otherwise, I remember in the past we would get so freaked out if either the Economist or the New York Times wrote a bad article about India, and everyone would be going around like, oh my God, see how the foreigners are viewing us. You don't care. These guys, I mean, beyond the point, most people tend to write leftist kind of stuff in the popular media. So I don't think it's like how in IPL. The advent of IPL stopped us from worrying about what the UK and the Australian commentators are writing about Indian batting and bowling, right? So it's become a bit like that it's a country which is now comfortable with itself, with the trajectory we've set on growth for ourselves. In this specific case, our regulators very, very admired, and they've done a fantastic job. So I think the market clearly just saw this as, some broker somewhere trying to write an article and profit from it. And one shouldn't put too much credence into whether it's the mainstream media or articles like this. This country is on a march of its own and it's going to arrive at its destination, whether we like it or not, whether those guys like it or not. And it's in the same way that the rating agencies are behind the curve. That if you continue to treat India as, BBB plus when UK is running a 5% fiscal deficit and a 3% current account deficit, and they get a high rating, it's showing you that the markets have given you a sign that the Indians are going and supporting the British economy by buying, Land Rover or by, as Sunil Mittal has done today. Well, their markets are bombed out and they need support of foreign institutional inflows. And in fact, to support their country rather than us. You saw the reception Chandra got when he had to go in and, do a small project in the UK, and the Prime Minister turned up for that. It's just showing you the rising importance of India. Yeah. And I think in our mind, we should forget about, all these minor criticisms that will inevitably appear in our way from people overseas. Yeah. And let me just leave it at that.
back. You're watching India Market Open. A quick check on implied Nifty as we gear up and for trade this morning. Also an update coming in from Japan. Their current Prime Minister is not going to be standing for re-election. And that could be one reason why the Japanese markets are trading lower, down about 0.2%. But locally, the big news is the Mauritian regulator has responded to those Hindenburg reports. And the regulator has said, and I quote, the IPE Plus Fund and the IP Plus Fund 1 is not domiciled in Mauritius. They also go on to say the country cannot be termed as a tax haven. Legislative framework in Mauritius does not permit creation of shell companies. Mauritius has robust framework for global businesses, strict requirements. Mauritius strictly complies with international practices, and Mauritius is a well-regulated, transparent and compliant jurisdiction. This is, of course, coming in from the Financial Services Commission of Mauritius, once again, I guess, rubbishing those allegations put out by Hindenburg on the weekend.
You know, it's very interesting, Samina, because aside of people talking, so Manish Chokhani, for example, right, you just heard him, that at some point of time, India as a nation should now start to ignore. I'm using this because the report that came out over the weekend, right, essentially, as you said, right, question the highest chair of the Indian market regulator, right? At some sense, this will be stopped and we should stop worrying about it. But also, people like Abhay Agarwal, for example, we were talking to him, Abhay Agarwal, some days back, and he was saying that the nature of the report or the research that has gone into that report that came out of the weekend is utterly, he used the term, this is graduate level stuff or lower than that as well. So
no, and there are all sorts of arguments during the run. Some of the legal experts I was listening into, and they said, you know, you're not going to, I mean, if you really believe in something, you come to India, face the music, give your KYC, provide all the information you have, disclose all the related entities. Sitting in the UK or the US and putting out reports cannot have merit and should not have merit.
Yeah.
No, but it's a good thing. The fact that we rubbished it, the markets, you know, did what exactly we were expecting them to, ignored everything that came out of the report. But of course, it also, I think, in a good way, shows the kind of strength India is, you know, exhibiting. It was not just the market participants, but regulator, India Inc., the legal community, everyone stood pretty solid against that Hindenburg report. I'm assuming they've learned their lesson this time around. But all down to today's market cues. It is going to be an interesting morning. Yesterday, 24,000 was respected, fortunately, but Agam is standing by with more on that. Agam, yesterday the sell-off really came out of nowhere, but 24,000 held out. It seems like if that range of 24,000 to 25,000 is still sacrosanct, and a break on either sides could change direction, but until then, things look okay.
Things look okay for the Nifty, yes, Samina.
Okay.
Just about okay. And, well, of course, 24,000 has a little bit of support, but we have broken below 50,000 on the Bank Nifty. So let's take us, let me take you through all the cues that are coming as far as what we can watch out for today. Now, as far as your August futures from the Nifty are concerned, we actually saw some shorts building in with a 2.5% increase in open interest, even as the index came off. Now, as far as the Bank Nifty is concerned, it's gone below the mark of 50,000 and closed below there. Can there be a recovery today? Well, not entirely certain, but there was a 17% increase in open interest towards shorts, even as the index came off by around 1.5%. Now, as we move into today's, options, trade, or perhaps on expected lines, there's a lot more writing in terms of calls closer to at the money as compared to puts. And as you can see on your screen there, a lot more writing around 24,400, 24,500 calls. And on the lower end, it seems like markets are preparing a little bit of weakness in the near term, which is why we don't have as much accumulation in puts as you can see here. It's like moving down to the Bank Nifty, the picture is not very different. We have certainly seen a lot more writing around 50,000, 50,200, 300 calls. On the lower end, we have a little bit of accumulation around 49,500 puts. And remember that a 1% move for the Bank Nifty is not improbable. And especially given the kind of volatility that we have been used to, you never know how things can, breach out for as far as the 49,500, put strike is concerned as well. Now let's talk about stocks, and it was a weak day of trade. We saw a lot of shorts in Aarti Industries, Chambal Fertilizers, SBI was under pressure, GNFC also down about, with shorts coming in, and even among stocks which saw unwinding, more long unwinding than short covering. MGL, Sun TV, HPCL, City Union Bank, all of them looking at a lot of weakness. So all in all, it wasn't a good day of trade, and because it's happened midweek and on a truncated week where tomorrow is a trading holiday, it's going to be a wait and watch whether or not there is more selling today as well.
Okay, so we'll talk.
Right. Well, but the question is, what do we do with these cues, and well, where do we go? So let's get in an expert. We have Avni Bhatt of GM Financial who's joining us on the show. Avni, good morning. Thank you so much for joining in. Let's start by taking a look at Infosys. I believe that's the first one on your radar. What is your analysis on this one, and how are you looking to trade Infosys?
So Infosys, after almost a 10% decent correction from the highs of around 1900 to almost the lows of 1700, the stock has started showing signs of bullish piercing engulfing pattern on daily and weekly charts. Although yesterday, we couldn't see the follow-up buying, but the good part is that it held on and there was no selling pressure seen in the stock. So it's holding on and it's ready to move on the upside and test almost around 1900 levels in a very short time. So I think if at all there is even a smallest of recovery in the market or a slight of short covering in the markets, IT sector is going to participate in that. That's the sector that will help Nifty also come out of the woods slowly and gradually, or at least stabilize. So from this particular sector, Infosys is the best stock that is showing a very good strength. And I believe that in a very short time, it should move close towards around 1900 levels. That's why we are going for a vanilla call option in this stock. That would be an ATM call option for the August series, 1800 call. So we should be buying in the range of around 28 to 29. Yesterday's close was around this level. And the target would be 55 rupees on the upside and stop loss is 14. So the risk reward is also pretty good.
Okay, so that's a view on Infosys. But Avni, going on, we have seen some very strong moves on oil and gas companies, specifically ONGC and Oil India. I believe one of them makes it on your radar as well this morning.
Yes, so ONGC, I know the overall outlook on the OMC is pretty bad, and overall it's a very sensitive sector, as in the oil prices are impacting our markets a lot. But if you purely look on the technical and derivative parameters, ONGC has had given a breakout around 326, 327, and it made a high above 340. And it has retraced back to almost, almost 50% of its move after the breakout from 326. And the open interest data also suggests that there is some kind of long unwinding that has happened, but there is no short addition in the stock. So it has come near the daily, the breakout level, support level, from where the breakout had happened, and we saw explosive move sometime back last week. So it has come back to that level, and I believe that from here onwards, maybe slowly and gradually, the stock is well poised to move towards around 355 to 360 levels. And that's why I would suggest going for a bull call spread in this stock for the August series. And that too, will be going for a strategy which has a fixed loss, so that this intermediate volatility that we are facing currently, and also we have a holiday shortened week, it shouldn't happen that we lose on the time value completely. That's why we go for a bull call spread, wherein by end of this August series, whenever the stock gives the move that is the expected move, we should be making profits in this strategy. So we'll be buying 340 call at around 6.5 and sell 350 call at around 4 rupees. So the premium outflow is around 2.5 rupees, and we expect this premium to expand to 7 rupees around that level. If on expected lines, if it expands to 7 rupees, our target would be around 13,500. And on the downside, we have a fixed loss of 5,000 rupees. So it's a strategy wherein you initiate, you know your losses right in the beginning, and you hold on to the strategy till the August end.
Okay, fair enough. And of course, as Avni put it, one of the many advantages of a bull call spread is that it minimizes the impact of theta decay significantly, which means that you can actually hold on to this strategy for much longer than, say, a vanilla call option buy. But Avni, on that note, thank you so much for joining us and taking us through your views on Infosys and ONGC. We will be keeping an eye on these stocks as we move into trade over the next few sessions. With that, it's back to you.
Thanks for that, Agam. Yes, we will watch out for ONGC and Infosys. Those are two recommendations coming in from Avni. The broader market, though, may have a bit of a muted session in a holiday truncated week. But two stocks that the markets may reward this morning is Manappuram and Muthoot Finance. They both reported earnings that were a clear beat on street expectations. The stocks, though, interestingly, went home with cuts of 2% each yesterday. And for the month as well, Manappuram and Muthoot haven't had it too great. Harsh is standing by with house views on both these gold finance companies. Harsh, solid earnings. Stocks have been under pressure over the last 3 to 4 weeks. So I'm guessing with brokerages sounding quite excited about these companies, there should be a little bit of an upside at least on both those counters.
Well, yes, I'll talk views, of course, but also a couple of points which brokerages seem to be making. First off, with regard to loan growth, extremely strong. They've shrugged off all loan growth fears, both of these counters. Let me start off with Muthoot first. 10% sequential growth, very strong, especially in the gold loan segment. Of course, this is a large component of the overall loan growth which they've guided for FY25 full year. In fact, 75% of the loan growth already achieved in Q1 alone. They're expected, basis management commentary, to revise their loan growth guidance for FY25 full year in Q2. So we'll have to await what that revised guidance seems to suggest. Reasons for this very strong growth. Well, Muthoot and Manappuram, different reasons. So first off on Muthoot, the reason that Muthoot seems to be suggesting is that one of the competitors, seemingly IIFL, has had to stand down with regard to loan growth, and they are therefore making the most of that. So that's the first key point. The second is customer growth seems to be strong as well. And mind you, gold prices have been on the rise. So there have been three factors which have aided Muthoot's numbers at the very least. In terms of operationally too, the numbers were quite strong. Yields have held up, but the operating profit has been impacted by higher provisioning. Bernstein as well as Jeffrey seem to suggest that the lower loan to value ratio that Muthoot has should aid the number in any case going forward, and cash losses should be limited for Muthoot at the very least. So not too concerned with regard to the higher provisioning they've done this quarter, which has likely impacted the bottom line, or rather the top line not flowing to the bottom line. I'll switch over to Manappuram. Again, loan growth extremely strong, 11%. They've not changed their guidance either. What they seem to be suggesting overall is that it's not competition or lack thereof of the loan growth. They believe that the higher gold loan prices is what's aiding the numbers for them. They don't believe that competition is a factor aiding the numbers, growth numbers at the very least. The numbers pretty much reflective for both entities, very similar. Good, strong yields aiding the top line, but you're seeing some bit of credit costs even for Manappuram. Now that, whether that's a concern or not, well, they seem to be suggesting that NPA ratios will start to taper going into Q2 FY25, and ROAs will seemingly move towards 5%. As we roll forward into FY26 onwards. So keep your eye out on this. Both of these stocks are going to be very interesting to see what they do today.
Okay, thank you for that, Harsh. That's, of course, going to be an interesting morning for these two gold finance companies at least. We have with us Mayuresh Joshi and Kush Bora, both joining in with their technical and fundamental view. Mayuresh, why don't we start with gold finance companies, Manappuram and Muthoot. What did you make of those earnings? And as an investor, would these be stocks you would buy?
Morning, Samina. Morning, Kush. No, as Harsh pointed out, I think the numbers were quite decent enough. And the expectations in terms of how gold pricing is expected to play out over the next few quarters, even if they stay at elevated levels, so the advantage that comes to these firms is the cushioning of the LTVs of the existing gold loan borrowers as well. Now, there is obvious competition in terms of unlisted players. There is obvious competition in terms of banks as well. But the management sound very, very optimistic in terms of a double-digit loan growth, specifically on its gold portfolio, which should largely augur well. In terms of provisioning that is expected to remain a little bit elevated on the balance sheet is probably because of some element of stress that can come through. And that needs to be seen whether that translates into some sort of asset quality deterioration as we head into Q3 and Q4. And so far, I think the numbers have been good. The management commentary has been solid. Anybody holding should hold on. I think we've got a very decent rating as we see it in markets with India. I think the EPS rating, RS rating against which we map all those stocks are reasonable enough for both these companies.
Coach, good morning. Before we come to your yesterday's ideas, today's ideas, etc., just a word on these companies. Last 5 days, Manappuram is up about 3%, 3.5%. Is there momentum enough if they start off higher for you to trade them?
Hey, hi Niraj. Hi Mayuresh. First up, a very happy Independence Day in advance to you and all your viewers. I hope the coming year is way more profitable for all of us, pun intended. So that's my genuine wish, profitable in every sense, health, wealth, in every sense possible. Now coming to the stock, very different setup on both of them. While Muthoot has had a stellar run and has actually moved quite a bit in the recent past, there are signs of topping out at least on the weekly and the daily setup. So I would actually be a little cautious on this one. A more prudent strategy would be a buy on dips, but I wouldn't probably buy the first dip which we saw yesterday. Closer to 1800, maybe even 1775 is where perhaps a good accumulation zone comes in for Muthoot. But overall, the structure is intact. It's just that a near-term topping out formation is sort of in place. So just be a little watchful on that. Manappuram, on the other hand, has, as I like to call it, paid its dues, seen a round of profit booking, taken support at the 50-day moving average and, attempting a rebound. So if it does sort of have a gap up opening, if it's anywhere close to, the 215, or rather if it surpasses the 215 mark, this will actually make it a more interesting bet. So for me, Manappuram is more favorably placed for, an up move than actually a Muthoot.
Apart from both these companies, Kush, what are your top recommendations for the day?
Sure. If I may just give a quick view on the indices as well, Samina. I think the key levels to watch for on the Nifty are 24,050, which is the 50-day moving average, and the Nifty has defended that for the most part. Below that, you've got the 23,800 mark, which has to be watched out for. Given the kind of nature of the dip that we saw yesterday and last week, I think a buy on dips is a more prudent strategy. Risk reward ratio more favorable at the current juncture, at least on the Nifty. Now, Bank Nifty, I know we've been talking about 50,000. For me, that was always a more psychologically important mark than a more technical one. 49,600 is the level to watch for. Was defended last week, was defended yesterday. As long as that is protected, you could consider a long trade on the Bank Nifty as well. But I'd still give it an opening initial 30 minutes, 1 hour before I go long, just because of the kind of sheer ferocity of the fall that we saw yesterday. So Nifty is a buy on dips with a tight stop loss. Bank Nifty, give it an hour before you go long from here. Also, without a very big headline factor yesterday, this dip looks more technical in nature. So there is a possibility that, we could see that rebound. Now, coming to the stocks, 2 of them and both of them on the buy side. First, I've got TVS Motor. This stock for the last 8-10 sessions has been hovering around the 2575, 2600 mark. Was not able to take it out. Yesterday, we saw that a big move come in. The resistance taken out on the back of good volumes. So I think from a near-term perspective, you're looking at 2685, 2725 as the targets, 2580. The resistance zone will now act as a support zone. The second one is Genus Power. The stock made a very good move yesterday. The resistance was somewhere close to 390. So profit booking, but only I assume on the account of the action that we saw in the markets yesterday. One could consider a re-entry for targets of 400, 408, 385. That's your stop loss.
Thanks for that, Kush. We'll take a quick break. Mayuresh, Kush, stay with us. We're gearing up for trade this morning. Implied Nifty indicating to flat to slightly higher start. We'll come back with more, so stay tuned.
All right, back with India Market Open right here on NDTV Profit. You heard from Kush Bohra about the possibility of a rebound. Let's ask Chandan Taparia, Head of Technical and Derivatives at Motilal Oswal, about whether he believes that a rebound which the implied open is suggesting could be sustainable or not. Chandan, good morning. Could there be, if there's a 30-40 point bounce on the Nifty, and if the Bank Nifty doesn't correct too much, would you play a bounce or would you play it safe today?
Good morning. Thanks for having me. First of all, wishing everyone happy Independence Day in advance. Talking about the Indian market, I believe the long-term view remains intact. But in short term, we are finding sustained selling pressure at every small bounce. And the Bank Nifty is having the weak structure, which is not allowing the Nifty index to hold at higher zone. In the last 3 weeks, the index has corrected from 25,000 to below 23,900 zone. It witnessed a recovery till 24,400 marks, but again, that recovery is being sold. So we believe that because of the weakness or hangover of the weakness in the global market is the reason that pause is visible at higher levels. So I believe that we are likely to be in a broader range. Market requires some time correction rather than price correction. And I believe till we remain below 24,350 zone, bounce could be sold and index has potential to revisit the recent swing low of 23,900 zone. Talking about the Bank Nifty, which is continuously making lower top, lower bottom on the daily scale. And we believe that till it holds below 50,250, this index can go down to us 49,500 to 49,250. So I look for some sell-on bounce for 1 or 2 day point of view. However, the long-term view for Indian market remains intact.
Look for a bounce. But Chandan, what about stocks that you like this morning? Any trades on the long or short side that you want to take us through?
Yeah, so I'll go with defensive bet with the view that if market gets limited upside, selective heavyweights might not perform accordingly. So need to go with the counter which are having the lower beta and the defensive nature. So first trade will be buy on Oro Pharma. The stock is holding well. We have positive on the Nifty Pharma index as well. Oro Pharma has been making higher top, higher bottom, given a fresh breakout on the rising trend line on the rising slope. So recommending to buy with support of 1460. Here we are target towards 1580 to 1600 zone. Second trading area, there is buy on Balrampur Chini. We have seen selective sugar companies are doing well. And here we have seen a support-based buying with hold of key moving averages. So recommending to buy with support of 495. And we have a target towards 560. So Oro Pharma and Balrampur Chini, two ideas from the pharma and the sugar space to play the defensive move in the market.
Kush, you want to come on Aarti Industries, 15% down day yesterday. I'm guessing everything they said in the con call now may be in the price. But for today, would you bet on a recovery on the stock and hence consider a long trade?
Well, for the most part, if you say the support zones of 605 were respected, the previous support was actually 625. The stock closed below that, after, a very heavy round of selling. So I'd give it one more day. If we do actually come up, above that 625, perhaps, give it some grace above that 630 mark, then perhaps, the recovery trade is in play. Just that, this stock is no stranger to volatility. We've seen sharp bouts, but we've also seen sharp rounds of profit booking. So I will keep a watch out for that. But I'll wait for the 630 mark to be taken out convincingly before I go ahead and buy. Otherwise, the selling pressure could persist and maybe the stock could consolidate for at least a few more sessions before it sees any kind of rebound.
I want to ask Mayuresh about those chemical names as well, but it's about time that we hear a quick comment from Hindalco's Satish Pai. You'll hear the whole interview at 9:30, of course, but he's talking about the impact of high shipping costs.
So for us, to be very honest, whereas the shipping rates going up has some impact when we export to, let's say, Europe, but overall our India business has not got any significant impact because we are selling 60% of our aluminum, 63% in fact to be accurate in Q1 in the domestic market. So the shipping costs have not impacted us so much. If you look at Novelis, because they do send a lot of can body sheet from Asia to the US and to Europe, that they have seen some adverse impact because the shipping rates have gone up because of the Red Sea problems. I know, but if you take what you said, how do I see growth? How do I see market demand? All these I'm seeing very positive. For example, the can market has come back. That's why Novelis volumes went up and the EBITDA went up. If you look at Indian aluminium demand on a year-on-year basis, it's up by 15%. The copper is up by 11%, driven by electrification. So it's very clear that in the coming quarters, you're not going to have any problems from a demand point of view. I think the demand will be quite strong. And I think that from a cost point of view, we are going to do everything we can to keep our costs under control. The only thing that we cannot predict is how the LME prices of aluminium will behave, because that's, as I said, driven more by macroeconomic or geopolitical events at this stage.
That's, of course, a quick thought from Mr. Satish Pai. The whole interview, and you will hear the whole conversation at 9:30 a.m. today. But it was an interesting conversation simply because, Mayuresh, the belief seems to be that the performance of at least the India business did much better than Novelis. But aluminum demand, much unlike ferrous demand, might be a tad bit better because of ancillary industries too. Does it make it attractive enough to invest in a Hindalco, a Nalco, maybe a Vedanta, essentially the non-ferrous names, or are there better sectors out there?
So, morning, Niraj. To that extent, if you probably look at how the ferrous versus non-ferrous play is playing out, obviously you've seen a lot of dumping happening by China in all commodities across this sphere. And therefore, HRC, CRC prices have actually taken a nosedive in the quarter itself. So I think how they recover is largely going to be dependent in terms of global demand and supply macro dynamics. But yes, Indian demand has been holding up very, very strongly for a lot of these names. Having said that, the expectations in terms of how pricing will be on LME largely will depend in terms of how China recovers and how the globe probably recovers as well. To that extent, the kind of inventory levels across commodities is at extremely low levels. As demand will start coming back, you will see a natural rebound happening in terms of restocking and therefore the pricing being reflected in a positive manner on the LME. Having said that, when will that happen? Whether it happens in a quarter or two is a large unknown for the markets. The second aspect in terms of the non-ferrous place, Niraj, as you asked, Hindalco at least is a tad bit better place, both in terms of their domestic operations, the backward integration that they're probably trying to achieve in terms of alumina. And therefore, I think volume should sustain as far as the Indian context is concerned. We've all been talking about the EV play, but I've been reading multiple reports across multiple companies which are operating out of the Eurozone. And there are reports that there is an imminent amount of slowdown that is probably emerging at this juncture. In terms of aluminium as a use for the battery casing itself, almost 21% in terms of the core material will be aluminium. So at some point of time, as the recovery happens, there should be recovery in terms of both the beverages, aerospace, as well as the EV business as far as Novelis is concerned, and Hindalco's exports are concerned as well. Till that point of time, I think within ferrous, non-ferrous, probably Hindalco a tad bit better.
Do you track Aarti Industries? The con call, of course, gave a sense very clearly, actually, that they won't meet their revenue guidance. But the stock also sold off 15% yesterday. Do you think it's in the price and maybe a good value buy at these levels on Aarti Industries?
So I think, Samina, it's largely gestated now. The management commentary was very, very clear that the Chinese dumping still continues unabated. And therefore, the entire perspective that one was taking into consideration in terms of the destocking that has taken place and expectations in terms of a rebound happening in chemical prices, we did see some element of respite in the last few weeks. But assuming a lot of management, and it's not just Aarti, you probably look at a lot of chemical companies, specifically the commodity chemical companies, have been vehemently saying the same thing, that Chinese dumping continues unabated. And therefore, the pricing pressure will keep on happening, along with the logistic issues that a lot of these export-oriented firms are probably facing at this juncture. Within the space, again, I think agrochemicals are a tad bit better because the pricing in favor of agrochemical companies at this juncture, prices have not just moved up, they've remained stable. The expectations in terms of prices being stable, at least from the management companies that we have listened to, seems to be a little bit more optimistic compared to the commodity players. So I think a bounce back can be expected already. The worst is probably getting priced in. But agrochemical players, PI as an example, gave very good commentary. Probably should be kept on your radar in terms of at least earnings expected to remain a little bit more stable compared to the rest of them.
Okay. Well, chemicals, and I wonder if Anupam Rasayan, by the way, is reacting at all to its set of numbers that came out, which were way below estimates. For now, 2% lower. Let's wait and watch how it shapes up. But there's a lot of stocks that catch attention because of a key brokerage note. Today's brokerage note is from the house of Motilal Oswal. Coincidentally, Chandan is here, but Harsh is joining in to talk about their coverage on Gravita India. Harsh, talk to us about this note.
Well, thanks for that, Niraj. Good morning. For Gravita India, it's a recycling-based company, and it's a unique play in that sense. Initiating coverage by Motilal, they see a 30+% upside on the stock price versus close yesterday. What they seem to be suggesting is, especially on the lead recycling front, there's plenty of which is a lion's share of the business for Gravita India. Around 88% of top line comes from there. They're expecting a very solid growth of 21% CAGR all the way through FY27. Plus, you have new business streams coming through. So you have aluminium and plastic, which are expected to also report roughly a 49% CAGR, and therefore rebalance that revenue mix. But lead, nonetheless, presenting a very strong opportunity in the recycling space for Gravita India. Utilizations are currently lower, and therefore, as utilization ramp up happens, they're expecting efficiencies to start to play out. So while top line may grow at just 25-26%, they're expecting nearly a 30% EBITDA CAGR all the way through FY27 on the back of this, and 30+% PAT CAGR all the way through FY27. So quite constructive. Plus, there is a capex plan in the pipeline, 600 crore of capex, which should ideally double capacity for Gravita India. So one is that utilizations will go up. Second is capacity will also double, and looks like a very strong growth story, at least from the way Motilal is describing this. Keep your eye out on this one. Likely very interesting one.
Indeed, it's one that we will track. Gravita India, a quick one on pre-open trade rates. The stock is up about 1.5%. We'll give it a few minutes and come back to take a check off it. It looks like it's going to be a positive start, so lots of counters that are going to be reacting to earnings. So stocks like Nykaa, SJVN may turn out to be the big movers in trade. Chandan, I'll come to you on a couple of these names that would be reacting to earnings today. So Hindalco, Apollo Hospital, Manappuram and Muthoot, and also SJVN and Nykaa. I've given you 6 stocks on back of earnings. You can pick what you like and tell me if there's a trading opportunity for our viewers here.
Yeah, so first I can comment on the Nykaa. Major trend of the counter is positive, and it completed its consolidative move of last 11 days. The good part is that every small decline is being bought if I look at the 2 months time frame. So multiple supports are visible, and I believe because of that, some support-based buying could be there as the stock is holding well above key exponential moving average. So with support of 181, we can look for an upside move towards 202 in Nykaa. Talking about Hindalco, some updates are there, but I'm not positive on the metal name. Major structure is slightly negative to range bound, so bounce could be sold. I'll avoid here. Hindalco will be the positive. Nykaa will be positive, but Hindalco, the multiple hurdle will be near 640 zone. Till it doesn't surpass 640, it has potential to again revisit the lower zone near 600. So 600 to 640 is the probable range for the counter. Now looking at the Muthoot and Manappuram, major trend is positive. Buy on decline could continue. So I think these are the 3 names one can pick for some positive stance. Talking about Muthoot, I am expecting a run up towards 1950 to 2000 in the counter with support of 1810.
Okay. Some upticks for Inox Wind and Inox Wind Energy yet again. 7% for Inox Wind Energy simply because there is an arbitrage. Just to lay it out that the arbitrage is in favor of India Inox Wind Energy shareholders. But remember, these stocks have really gone through the roof. Look at the chart of the last 5 days of Inox Wind Energy. Granted, they were very good numbers, but just look at the upsurge that has come into those stocks. It tells you a story of just needing to be a bit watchful about when you get in and buy into some of these names. So please be mindful of that. Mayuresh, I mean, a Suzlon at 1,15,000 crores market cap, EV EBITDA FY25 is over 100 times. Sure, there is growth. Would you buy it at these levels? You can well have a view that you want to, by the way. I'm just wondering if you do.
Not at these levels, Niraj, no. So I think growth at reasonable price is always a sensible adage that we've always heard to in markets. And therefore, I think, yes, the structural drivers probably in place. Very few players left over the last 5 years. Few players have survived. And therefore, I think the kind of bidding that can come through can be significant. There can be a significant amount of order accretion that happens. But I think the price, and as we see it at Market Finity as well, a lot of these stocks are making late stage basis. Any quarter or two of execution miss might have reversals which can be equally as sharp. So I think one needs to be a little bit wary at these levels.
Okay. Well, about 3 minutes left. Let me try and nail it down to that one top idea from both our experts if we can, because they've given their ideas. Chandan, maybe you've given your stock ideas as well, but I would love to know, and now that the pre-open rates have settled and some of those rates have settled, to both Kush and Chandan, your one top call after, on the basis of the opening likely to be at the pre-open rates. Chandan, to you first.
Yeah, so I'll stick to the ideas which we have given. I'll go with Oro Pharma. A major trend of the counter is positive, and it has been making high top, high bottom. I believe defensive plus momentum, both kind of setup is here. So one can buy with support of 1460, and I'm targeting for 1600 plus level. That is 4 to 5% from current zone.
Okay. And Kush, the same question to you. One idea based on the pre-open rates, of course.
So, Niraj, V-Guard is looking interesting again. It's had a sharp round of profit booking about a month or so ago, made a base and then, given a sharp up move in the last 2 sessions. But this is on the back of good volumes, retesting the previous highs. I think, this up move should continue. I see the opening also at about 532 kind of levels. I think one can hold on to this one or maybe make a fresh entry as well for targets of 550. Now, the stop loss will come at the closing levels of yesterday, which is 520 or maybe a little under.
Thanks for that, Kush. Lots and lots of stocks that will be reacting to earnings. The market is expected to open up flat. So no fireworks are expected in early morning trade. I think Niraj and my debate will still stand, and we'll wait to conclusively close it at 3:30 p.m. this afternoon. But for now, Niraj, it's not looking as exciting as we'd have liked. Wall Street was solid, but Asian markets haven't really taken heart from what they've seen. And I largely think it's because of this truncated weekend that bulls may not come back with a bang. I don't know, maybe we still have a minute. Chandan, do you agree? Do you feel like despite a strong handover from Wall Street, there is a little bit of nervousness amongst the bulls even now?
Yeah, I agree with you for short-term point of view. 2-3 things I'm observing here. One, the put-call ratio fell from higher levels. The key index, Bank Nifty, is not supporting. HDFC Bank, which was contributing earlier, surrendered the gains and now have the risk to go below 1600. So I think these 2-3 are the reason that is not allowing me to look for the major bounce. And because of all these, I'm expecting the limited upside. I think bulls might not be on the trick. They might be on the rest and the consolidation mode to enjoy the festival of the country.
That's true. Enjoy the festival of the country. By the way, for everybody, I mean, I'm sure a lot of nooks and corners have this feeling, but when you travel through BKC in the evening, Bandra Kurla complex in Mumbai in the evening, buildings are lit up with this saffron, white and green. And so are the two of us. Saffron white, you are green. It's just perfect. But yeah, it'll be, it's great. I mean, Chandan used the right term. Enjoying the festival of the country. Independence Day has become that. Okay, first rates, this penultimate day to the Independence Day, a flat start, about 0.13%. So not great shakes, just about 23 odd points. Anyways, the implied open was suggesting about 28 to 30. Mid caps and small caps very quickly should pull them up as the Bank Nifty flattens out completely. Mid cap index 1/3%, very, very quiet. Small cap index too should be quiet probably because it's a flat day of trade. Good part is, as the heat map will show you, HDFC Bank is not sulking too much. One which is cracked the most is Divi's. I suspect this is because of a drug launch which is happening sooner than later, and that's why Divi's stands to lose out a little bit. Hero MotoCorp, 1.5% lower, posts the numbers in line, nothing too special, but equal red and green. So that's the long and short of it. By the way, some other losers: ICICI Bank, Adani Enterprises, HDFC Life. HDFC Life, 2 days on a trot, by the way, has been down despite having a fairly decent monthly performance. What's doing well? Hindalco, up 1%. Tech Mahindra, Tata Motors, Apollo Hospitals. I must hand it over to Samina, frankly, because when you look at the large cap space, there isn't too much, Samina. Even Stevens, Divi's on news, and maybe a Hindalco.
I'm also surprised with the reaction on Hero MotoCorp. Numbers were actually in line. The stock is down 2%. It's your second top.
Yeah, I think people don't like just inline numbers.
They don't like it. It's the brokerages to blame. If they're setting expectations so high, there is disappointment.
Yeah. No, but just before what I was watching out for was HDFC Bank, and it's right here. HDFC Bank is not sulking like yesterday.
But I was hoping it could recover this morning, but yeah, it's flat. It's not selling off any further, like Niraj said. But lots of broader market earnings reaction today, and the reactions are sharp, I must warn you. The broader markets are outperforming, and this is not a good sign. So the breadth of the market is slightly weaker across the broader market universe. The mid-cap space, small cap, and the micro-cap space is trading worse off than the benchmark itself. So while the benchmark may be holding out, it's the other verticals of the market that are looking far worse in today's trade. Well, like I said, lots of earnings, and let's quickly move on to those. I'll start with Apollo Hospitals. I'm not sure whether the reaction is too sharp, but definitely worth a mention because they posted earnings, and earnings were a clear beat. And like Niraj said, markets don't like inline earnings. You'd have imagined they'd like Apollo, but they aren't reacting to Apollo Hospitals just yet. TBO Tech also reported numbers largely in line. The stock is flat. Look at Texmaco, solid earnings. They've also seen an operational outperformance, but the markets are in no mood of rewarding what they believe is in line with what they were expecting. The stock sees a flat trade. On the sell side would be MTAR, HEG, All Cargo. Very weak numbers coming in from these stables. MTAR is down 6%, HEG is down 6.5%, and All Cargo Logistics remains flat despite a weak set of earnings. Ola Electric pops in the middle of all my earnings reaction this morning. The stock is up 70% since listing. The reason it's on your screen this morning is because they will be reporting their first set of numbers to investors this quarter. This is the first reporting after its listing on Ola Electric. So watch out for how this counter reports today. Techno Electric numbers were fairly strong. If I can get Techno Electric up on the screen, 3% up move on that one. Astra Microwave was a standout in terms of earnings this morning, but the stock is flat. SJVN also reported earnings. Again, very good numbers from SJVN. It is your top gain on the Nifty 500 the last time I checked. Let's see if that still sustains in trade this morning. If we can get SJVN and Nykaa, that should be helpful. SJVN is up 7%. Nykaa as well reported earnings that were good. They've also talked about acquiring 39% in Dot and Key, on back of which the markets may be rewarding the counter in early trade. In fact, even Chandan agreed that this stock could be seeing a positive bias. For now, it sees a gain of nearly 1%. Matut and Manappuram, earnings were good. Brokerages seem impressed. Let's see if the market participants seem as impressed. Both those counters went home with a cut yesterday, and they continue to trade weak in this morning's trade despite earnings and despite brokerages giving this one a thumbs up. Well, all in all, Niraj, I don't think it's a great start. The earnings that most of us believe were good, markets are not rewarding it this morning.
Yeah, a very, 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 it's, very interesting set of moves that are happening on trade today. Let's give these a chance to stabilize because the broader markets too haven't quite really perked up. Now, Samina's marked some of the newsmakers and, you know, the HEGs and Piramals and the MTARs of the world, which are doing what they are doing. Some others should come up on your screen. Ajanta Pharma has had a good move today, so keep an eye out for that. There is strength in Oil India, a bit surprising, but up in green. And some of the financial names, Chola Holdings, Motilal Oswal, seem to be doing okay as well. Okay, quick initial thoughts. Kush Bora, anything that stands out? Any trades or just sit quietly?
How could you, in this market? But so just a quick update on V-Guard. I think we were talking about a target of 550. I don't honestly know if anyone got a chance to get in, but then now it's perhaps gone a little out of reach. So, you might just want to hold back. If you've got an existing position, no issues. You could continue holding. That's the kind of momentum that the stock is seeing, but no fresh entries from here on. I think TVS Motor, stock that we discussed in the morning is one perhaps you can still consider. Quite contrary to the market trend, this one seeing strength could continue to move higher. And we've already discussed the targets, which are 2685 and 2725, 2580 being the stop loss.
Right. A quick check on some of your top losers. I think we mentioned it between Niraj and me, but HEG 7% off. Piramal Enterprise, we did tell you that the numbers were weak. The only hope it had is that the brokerages were largely expecting a weak set of numbers, but the markets have decided to punish this one. 6% off. Their profits have sank over 60%, so it's actually a rough one for Piramal Enterprise. MTAR Technology, Anupam Rasiyan, these are some of your top losers. Keynes Technology, Phoenix Mills is down 3%. Kalpatru Projects is looking weak. Lemon Tree, the whole market as such is not seeing or being able to hold up in trade this morning. On the gaining side, you've got V-Guard that's up 8%. Not sure what's happening there. And SJVN is up 7%. Samvardhan Motherson Sumi, we will be talking to the management shortly on the show. The stock is looking good on back of earnings that the street might have liked. Well, you had two buy calls this morning on the Infosys and ONGC. Let's pull those one up as well. On the F&O segment, our guest recommended those counters. Just getting an update on that. Infi trading with a positive bias. ONGC, if I can pull that one up too, should be useful. The stock is trading flat, so not too bad in terms of trade. Mayuresh, we go into Ola Electric earnings today. The stock is up 70% since its listing. Before it listed on the exchanges, there was enough and more noise about how this was an expensive stock. But retail participation, there's no stopping. How do you feel about this one? Do you feel like the earnings, if the earnings are good, what should you do? And if the earnings are weak and the market punishes the stock, would you recommend going into Ola Electric if you don't already hold it?
So the answer is pretty simple. I think at the time of valuation, it was very expensive. Now it is even more expensive. So I think even if the earnings are not as per market expectation and the stock still corrects, we will still need the stock to probably just settle down and have a look at earnings and how they play out, at least for a quarter or two. Obviously, the new launches that they are embarking upon is a very positive sign. There is huge expectations in terms of the entire two-wheeler EV ecosystem. And the kind of strides that they have done. Obviously, competitors are also launching more variants in the next few quarters as it comes. And therefore, the earnings should be very, very interesting. But to answer your question very simply, expensive, it has become very, very expensive. Even if it corrects, we would still like it to settle down.
Let it settle down is Mayuresh Joshi's call on this one. By the way, Suzlon is down 2% now, so that one too, in line with some of the others, is correcting for sure. Kush, Piramal Enterprises, like some of the brokerages noted, not the best of outcomes in the quarter. The stock is duly reacted. It's a liquid enough stock to trade as well. Would you trade it on the downside?
Haven't traded it, on either side, Niraj, long or short. Plenty of other options, with a more clear bias, with a more clear trend. This one has its share of volatility. Hasn't really had sustained moves. So I actually don't really recommend it for either a long or short. If someone's got it, then I think the key level to watch for is 905, which is the 200-day moving average. If you've got a long position, keep that as the stop loss.
Okay, so that's one. Okay, Kush, you mentioned that there are some with very clear trends. You've spoken about V-Guard, which Samina pointed out. What else? Is there anything that is trending and standing out for you?
Well, a couple of names that, we've seen. Suraj Estate, this is one stock that, contrary to the trend of the rest of the pack, has actually seen quite a bit of a run. In a bit of a profit booking mode today, but I think on the whole, if you see, there is a very clear trend. It's actually gone north quite sharply. Might continue to do so. So a buy on dips on this one. Orion Pro, this was incidentally one stock that we discussed 2 days ago. Had hit the target on the very same day of about 1800 and then cooled off a little. So this one too is on our radar. So any kind of dips, and any kind of stabilization that happens. Orion Pro, Suraj Estate, these are a couple of names apart from the ones that we've already discussed that are on my buy list.
Well, that's the trade sense coming in this morning. Kush, a quick update. While it may not be too wise to go long on the Nifty at this stage, is there any opportunity on the short side on Bank Nifty?
There is. See, we are now very close to the lows that we made last week, right? I mean, which was, I think, about 49,650, if I'm not mistaken, thereabouts, correct. If we do sort of break below that, then I think, the floors open up to 49,100, 49,200 kind of zones, which are the next key support zones. So if you want to preempt that and take a short trade, then perhaps, you can consider. As I said, if 49,650 is broken, then you've got another 500 to 700 points of downside to play for. Your stop loss comes in at 50,000 or maybe just above that, 50,100 kind of levels. But this is a slightly conditional trade, so just be a little watchful. If the Bank Nifty does sort of take support here, then it could consolidate for some time.
Okay, Mayuresh, before we thank you, anything in the results season? Of all the 5,000 odd companies that came out, but that one name where the results really impressed you or really disappointed you? One name.
So I think a couple of names, Niraj, in fact. From the oil and gas space, since you're talking exploration, right? I think Ceylon Exploration has given a very good set of numbers. And what is probably transpiring is the expectation in terms of the new oil fields expected to contribute even more. So a lot of drilling has happened, a lot of commencement is expected to happen for the new wells that are expected to get dug up in the next few months and the next couple of quarters as well, which will incrementally add to volumes as we head into FY25 and as we head into FY26. Having said that, the kind of numbers that can still keep on coming through along with cash flows can be significant enough for Ceylon to probably be on top of the traders or investors list as well. ITD cementation, again, continuing the good show, both in terms of order book as well as execution. So to that extent, the kind of commentaries that we probably heard over the last few quarters, and even after this quarter's numbers, the management sounds very, very optimistic, both in terms of executing that order book, not just on time, but ensuring that the kind of margin improvement that is expected to come from these orders can probably get sustained. So I think a little bit of these domestic inward-looking themes and where numbers have probably stood out are these two. I think a lot more, but I think I'll just stop at these points.
Okay, interesting. Thanks a lot for that, Mayuresh. Thanks a lot for joining in, Kush, to both of you and your families and friends. A very happy Independence Day in advance. May it be a celebration of our nation. Take a short break. On the other side, we're joined by Satish Pai, MD of Hindalco. Stay tuned. Back with India Market Open. We are now joined by Satish Pai, Managing Director at Hindalco for an assessment of quarter one. Mr. Pai, good having you. Thanks for joining in. Are you happy with the overall performance in quarter one?
So first thing you have to realize is 80% is on a year-on-year basis. If you see sequentially, we have been steadily going up because our costs have been steadily coming under control as coal prices moderate and carbon prices moderate. So I think that, going forward, to be fair, the LME has come off its highs now. So we are a couple of $100 down compared to the LME of the first quarter. So I think that it's quite clear to me that Q2 profitability will be at a slightly lower level than Q1 because of the LME. Now, overall, how will the LME behave going forward is very tricky because it is very much driven by macroeconomic events, geopolitical events, not really supply and demand. So, particular incidents can spike the LME upward. And sometimes, like if poor economic data comes out, the LME goes down. So we are in for some very volatile commodity price market. I think what will hold us in good stead, which you said, is our cost. So if we can keep our costs under control, then we will be producing very good results.
Okay. When I look at the EBITDA performance, Mr. Pai, the upstream EBITDA did really well. Downstream was not able to quite live up to it. Just trying to understand, how do you see the quarters ahead?
I know, but if you take what you said, how do I see growth? How do I see market demand? All these I'm seeing very positive. For example, the can market has come back. That's why Novelis volumes went up and the EBITDA went up. If you look at Indian aluminium demand on a year-on-year basis, it's up by 15%. The copper is up by 11%, driven by electrification. So it's very clear that in the coming quarters, you're not going to have any problems from a demand point of view. I think the demand will be quite strong. And I think that from a cost point of view, we are going to do everything we can to keep our costs under control. The only thing that we cannot predict is how the LME prices of aluminium will behave, because that's, as I said, driven more by macroeconomic or geopolitical events at this stage.
Mr. Pai, I want to talk about two things now: growth over the course of the next 12 months and costs, particularly the impact of shipping costs, because a lot of companies are saying that shipping costs, because of the geopolitical tensions, have soared, and that is impacting their numbers and performances, international businesses in particular. What's your experience?
So for us, to be very honest, whereas the shipping rates going up has some impact when we export to, let's say, Europe, but overall our India business has not got any significant impact because we are selling 60% of our aluminium, 63% in fact, to be accurate, in Q1 in the domestic market. So the shipping costs have not impacted us so much. If you look at Novelis, because they do send a lot of can body sheet from Asia to the US and to Europe, that they have seen some adverse impact because the shipping rates have gone up because of the Red Sea problems.
Okay. And what about demand outlook? Because a lot of notes are, I think on the con call you mentioned about how the beverage can piece looks okay. In fact, you spoke about it earlier in the interview as well. What is the demand outlook for the next 6 to 9 months?
No, I think that, the can market, just to be fair, went through an extended period of destocking. So I don't see can demand being adversely impacted unless there is some major global slowdown or something like that. The auto market, that the sale of EVs has slowed down a bit, but we supply aluminium to both ICE engines as well as EVs. So we are fairly comfortable there. The aerospace demand has gone through the roof because the backlog for planes is huge. Building and construction in the US, that on the high interest rates that had slowed down, as the interest rates, everybody's getting clear they're going to cut, the building and construction market is coming back. So I think that what I worry most is geopolitical events, because that can, then all bets are off if something adverse happens there.
Okay, but interesting you speak about aerospace demand because we were talking to some companies who are suppliers to Airbus, Boeing and the likes, and they were saying that those companies have brought down their supply estimates for the year. Are you sensing the lack of the pace of demand from aerospace companies?
We are not sensing that because the aluminium sheet and demand from the aerospace side for us is quite strong. No, we are not sensing that, honestly.
Fair call. I have one final question, Mr. Pai, and that's expansion plans because you have expansion both on upstream as well as downstream, forward as well as back integration. Talk to us a bit about this. When do some of these come on stream?
So I think that, for the first time now, we have started to say that our downstream investment cycle is reaching that stage where we will now harvest what we have done in the downstream. And going forward, the new capex is going to go more into upstream. So we are going to focus on the alumina refinery. We are talking about a new copper smelter. We're talking about a brownfield expansion of the aluminium smelter. So I think over the next coming years, you're going to see capex going more towards upstream while we harvest our investments in the last 3 to 4 years on the downstream.
Okay, Mr. Pai, we'll leave it at that. Thanks so much for taking the time out and being with us, giving us these insights. All the best for the quarters ahead. That's the view from ABB, rather from Hindalco. Excuse me for that. But the stock has done well today. I think brokerages largely have been sanguine about what they have had to say, and which is why maybe the stock trending, in fact, and trading at the high point of the day. I wish we had Kush right now. We would have asked him. But what we'll do is on the FNO show or some of the other shows, we'll try and get a view on a trading strategy on Hindalco. We did it at 9 a.m. We're lovely to do it now, now that the stock has rallied. But tell you what, take a quick break. Come back now with Apollo Hospitals.
Welcome back. You're watching India Market Open. Of course, you heard that conversation with the management of Hindalco, and now it's time for Apollo Hospitals. Apollo Hospitals reported record numbers. They saw a profit jump of 82% and revenues of 15%. We have with us the lady at the top, Sunita Reddy, Managing Director at Apollo Hospitals, joining us to review those numbers for us. Sunita, good morning. Thank you very much for joining us. Let's start with the basic hygiene numbers. It's the first quarter of FY25. How has the year started off on revenues and margins? I do remember last year you committed to a 15% revenue growth on top line, and you've delivered in line. What were the key drivers and where did the growth come from?
It's quite ironic because all three verticals grew at 15%. So we had a revenue of 5,085 crores, and which was a revenue uplift of 15%. Our EBITDA came in at 672 crores. Again, this was very healthy, 33% EBITDA improvement. We had 305 crores of profit, which was an 83% improvement in profit. So this is consolidated Apollo Hospitals and definitely very healthy growth and profitable growth. Moving on to Apollo Health Co, which is both online and offline, we had 2,637 crores of revenue, and we had a margin of 150 crores. So, it was, let me say, they brought down their cash losses and they did very well. Again, a growth of 15%. Apollo Health and Lifestyle had 331 crores of revenue with an EBITDA margin of 31 crores. So clearly, I think that, there is growth in revenue and growth in EBITDA and growth in profit for all three, with healthcare services profitability moving to 328 crores for the quarter.
Mrs. Reddy, I'll take your point on profitability because that number came in far better than what we were expecting. Your profits have gone up over 80% and we appreciate that. But we'll talk about that in a minute. At the start of this quarter and at the start of this financial year, you've given us a good sense, and of course we've seen what Apollo Hospitals has managed to pull off. Now, as we look ahead into the rest of the year and the next few years out, what is going to be the key drivers, and are you expecting, or is there room rather for improvement on the key parameters? What will drive growth for FY25 and FY26?
Yes, so there is room for improvement, and I think that what we're looking at is, better asset utilization and some compression in cost to deliver better EBITDA margins. And for 24/7, I think the opportunity is huge because post a slightly quiet quarter where we had elections and a heat wave, I think they're ramping up really well. So they will be back on track to 20% growth. And in Apollo Health and Lifestyles, we are seeing diagnostics growing very fast, along with our centers of Cradle and Spectra, which opened in New Delhi, also breaking even.
Mrs. Reddy, I want you to throw some light on occupancy. Last quarter it stood at 65% from what I remember, 65-70%. Internally, where do you see occupancy stand at and how do you plan to improve this going ahead? Also, the volume growth for inpatient and outpatient and the number that you'd like to see being achieved on volume growth by the end of this year.
So clearly, in terms of occupancy, we are at 68%. We were at 62% last year. There has been a volume growth of 11% that has really led to this. And at metros, metro hospitals are at 70% occupancy. So I think we do have operating leverage, where we can improve occupancies in our tier 2 as well as in the metro cities, and therefore reach a level of 70% within this year.
And that would be comfortable, or would you aspire to do more?
So, of course, we'll aspire to do more. But when you're doing 70, you're probably doing 75 on weekdays. So, So we're really looking at this. We've lowered our loss. So we will continue in this journey and maximize asset utilization.
Sangeeta, I'm glad you bring that up because I was listening to your previous interview, which was, of course, last quarter, where you've said that RPOB are improving because you've managed to reduce your hour loss. Now, this, of course, was what we heard from you last quarter. Going into the rest of the financial year, where does hour loss stand at, and where do you see the average room occupancy stand at right now, or average bed occupancy at?
Yes, so our loss, I don't think we can expect to see a further reduction in our loss. I think RPOB will grow because, we do believe that case mix will improve in the next quarter. This has been, after all, a summer quarter where elective surgeries have been a bit muted.
Right. Let's talk about the margins in the hospital segment, Sangeeta. This is a high margin business. You've also hired 150 doctors in FY24, and how is that expected to impact or look going ahead? I mean, maintaining a 25% or aspiring to be at a 25% margin is very, very healthy and street pleasing for sure.
Yes, we're very much on track to achieve that.
So in terms of other verticals, in the last quarter, you talked about the tie-up with the insurance broking firm Bupa. Has that already kicked off? Is the ball rolling over there? And also, over the next 2 to 3 years, are you looking to doing more tie-ups in order to just simply improve operational efficiency and bring in revenue from different sources in that sense?
No, so we've not yet launched the insurance broking, and I'm hopeful that next quarter we'll be able to do so. But otherwise, Apollo Health and Lifestyle, we can expect to see good growth coming from it. Pharmacies offline has grown by about 12%, slightly muted again because seasonality. But you will see good traction going forward.
Sangeeta, you've talked about your very ambitious plans of adding, 2,300 beds over the next 2 to 3 years. I know there was an acquisition that was made in Pune, which I'm assuming, or we'll talk about whether it turns revenue accretive. Is your plan on track to achieve that? Because we also know that assets available are not that many really, right? Will you be able to achieve that 2,500 bed target in the next 2 to 3 years?
Yes. We have made 3 acquisitions and we have 2 brownfield projects. So yes, we're very much on target. In financial year 25-26, you will see 2 of our assets coming online. We'll have 1,000 beds online by then.
Right. Sangeeta, also the oncology business has been growing very well for Apollo Hospitals. Are you looking at acquisitions in that space? And I know this because you're quite passionate about this vertical from what I understand. Or would you be looking to grow that organically? What sort of numbers should we be expecting?
Currently healthy organic, and it's also the fact that, in each of our 45 hospitals, we now have a clear vertical that delivers on oncology. So we have invested in CapEx and we do have the full range of oncology services.
Well, good luck, Sangeeta. We'd love to, of course, have a more extensive conversation with you, hopefully mid-quarter, to get a better understanding of your business. But good luck and congratulations. It's been a good quarter. We hope the good ride continues from now on. Well, that's the management of Apollo Hospital breaking it down for us. They've delivered 15% revenue growth. Margins have improved. Profits are up over 80%. They're on target for 2,500 beds to be added over the next 2 to 3 years. Also aggressively looking at acquisitions this year. They've identified, I believe, something, but still not ready to talk about it. Well, the markets in the meantime are as flat as a pancake, 24,162. The good news is 24,000, is being respected, and that is going to be a critical level that the bulls also will be tracking. A quick check on the wicks, because that had seen a little bit of an uptick in trade yesterday. A quick perspective whether that's actually jumping up. Oh, it's actually cooled off, so that could be a little bit of relief coming in for the street, down 2.5%, sub 16 on the wicks. Lots of earnings, and the breadth of the market also is something that we are closely tracking. But let's quickly shift gears to Samvardhan Motherson. The company reported a 69% rise in profits and also saw revenues jump 29%. The stock is on your screen, trading at the day's high point with a 4% up move. We did get a chance to catch up with the management on the quarter gone by and the road ahead for the company, so listen in.
We would say that yes, the performance was really very good, and and it has to be seen in the context that the global automotive industry remained flat. Despite the growth and also the large M&A payouts, also doing growth capex, our leverage ratio has been maintained at 1.5. This financial prudence also resulted in ratings upgrade in this very volatile world by Moody's, Fitch, CRISIL, and also a first-time rating by Japanese credit agency, which gives us a stable rating. So we see continued investments in our future growth capex. 2 of our facilities are commencing production. 17 new greenfield sites are under different stages of completion. So the growth is coming from the developing economies, while the developed economies see this flattish or slight sluggish growth or a bit of softening of demand, like in Europe. It's been bit more volatile in terms of the powertrain, whether it's ICE, hybrid, or EVs. So there has been kind of confusion in the market and it's getting stabilized. But Motherson is powertrain agnostic. So we have a very good strong point that our products go to every different vehicle which is there. We also see that the trajectory in the world market is towards premiumization as well as SUVs growing all across, which is also helping us to grow. So on an overall basis, we do see ourselves as a very strong growth engine in this market, and also the growth of the company into the non-auto side gives it much more strength for growth coming in the longer duration.
Well, you didn't mention that, SUVs, I think in the previous quarter as well, you pointed out that most geographies are upwards of 40%, while some geographies like North America have seen SUV penetration of upwards of 52%. Before we get into the business, I just wanted to, question on, the P&L impact of any kind of acquisition. Last quarter, you had pointed out that for Yachiyo, Lumen, as well as ADI, you might see some impact in Q1. Margins have also come in while higher by about 100 basis points compared to last year. It's just shy below the 10%. So have you seen any particular impact on margins for acquisition in this particular quarter? And how would the outlook be for margins going forward as well?
So like you always know, we really do not guide about margin, but let me put the right context to this. You're right that there is a 100 basis point improvement versus the previous quarter. So from 8.6, it's moved to 9.6%. It is shy of 10%, but it is actually higher than the entire year last year. Last year's entire year margin was 9.3%. We are in the first quarter itself sitting at 9.6%. So that's the context on why we think all the M&As have been margin accretive. The total M&A, let's say revenue pool that has been assimilated in this quarter is just slightly above 6,000 crores. And the aggregate margin accretion has happened on account of the M&As, together with considering that there are integration costs, etc., that have already got embedded. So the 9.6% should be seen in that context. Now, as we move through the rest of the year, while we really do not talk about the margins, but if you look at the ROCE, our ROCE has improved to 80-odd%. And directionally, we had highlighted last time as well that we should be improving on an year-on-year basis going ahead, and we should still be seeing an improvement in the ROCE as we move through the rest of the year.
Just coming to the debt levels, while they're slightly up from the last quarter, it's maintained around the 1.5 times, and this year you're going to see a lot of capex intensity from the company as well. 1,000 crores already invested in this particular quarter. I think if you can just reconfirm, the number was 5,000 crores for this year as a plan to invest across the verticals. But my question was more on the revenue growth we've seen in verticals. Now modules and polymer has grown by upwards of around 27%, and emerging business of course growing by 40%. The rest have seen a high single-digit growth. Is this the kind of, while you can't confirm, you can't quantify it, but do you see this kind of trajectory going forward as well, especially with what the commentary you've said on Europe being a slightly slow, and the production volume also you've called out in your presentation being slightly lower, with EVs also going at a slower pace than thought of before. So how would you see these particular things going forward?
So look, firstly on the debt, let me clarify. You're right, it is 1.5x. The capex guidance remains 5,000 plus minus 10%. We may need to recalibrate this, given this was done at the end of last quarter. In this quarter, we have already got 3 new businesses, which is Lumen, ADI, as well as Yachiyo coming in this quarter. So we will have a relook at the capex given the increased business perimeter that exists. Together, we have also announced 1 new greenfield in Mexico. But in spite of this, I still hope that by the time we come in next quarter, we should still be in and around that 5,000 mark. Having said so, on a full year basis, we are still guiding towards a deleveraging path. We should still expect that the leverage ratio from here will further go down, hopefully closer to the 1x, if not beating the 1x as well. This is obviously with the current business parameter, and things could evolve as M&As happen if it happens during the year. To your point on growth in emerging versus module polymer and so on, look, number one, if you look at our capex, you are seeing now 17 new greenfields in play, 19 actually, 2 have just commenced, so 17 is now remaining. 7 of them are in the non-auto. And if I look at emerging as a whole, nearly 50% would be coming on the emerging businesses space. While all of them are in emerging or developing geographies, 50% of the capexes are coming in the emerging space. And hence that part of the business will continue showing disproportionate growth, if I were to put it. The rest of the business will have a reflection of how the business profile moves. What you saw in the current quarter is also an impact driven off EVs in terms of the sluggishness that you're seeing in Europe specifically. A lot of it is driven by sluggishness in the EV space. We actually continuously see an improvement or an enhancement in the ICE programs or elongation of the ICE programs. Hybrids continue to do well. It's probably right now the highest growing segment. So being a power agnostic play, it really over the medium term does not really make much of a difference to us as long as the volumes play out. And in the short term, we will continue to work with the customers to elevate any pains that may have happen on the way.